Happy Friday, everybody. Everybody having a good day so far? Be much better in about, 45 minutes or so. Yeah, almost done. I know I'm the gatekeeper of your weekends for many of you. So I take that responsibility very seriously. Today, I think we'll be done a little bit early. I'm not exactly sure how early, but you can rest assured that I'm not trying to stand between you and a wonderful weekend. Is anybody doing Vita prep this weekend? I'm doing an all-day shift tomorrow, so I'm starting out in the assembly room, and I'm going to be doing greeting. That may be a dangerous thing to put the audience as the greeter. I say, well, you don't really need to be here. What are taxes really for?
But you're such a friendly face.
I am a very friendly. I fake it really, really well. So
like a personality hire.
I'm just joking. That's actually why I'm here at Truman. Think I really know what I'm talking about? I mean, let's be honest. No, I teach memes. That's all all right. We got some more to go over, so let's go ahead and do it. By the way, just occasionally I'll just really, really admire when people roast me. That was very well done.
I wasn't roasting you.
No.
I was hyping you up for Biden.
Oh, I do have to buy it. Okay.
You don't have to know taxes to do it.
Yeah, that's right. That's right. Personality. Actually, there's a really funny story. I was on Facebook and Dr. Lee hit me like 3 times with back-to-back comments that were just slamming me down, and I was just like, "Where did this come from?" She's sweet and so nice. I mean, I just didn't have any responses. I was like, well done, well done. So I'm a big admirer when somebody says something far more clever than I've said that for, and I just kind of like to give props. So that's where I was coming from there. I don't want you to take the I take any offensive. It's like automatically recording an F in the very no. All right, this train is going to completely derail if I don't start. Sarbanes-Oxley Act of 2002 requires management to include a report on effectiveness like copper in the entity's annual report. It also requires auditors to report on the effectiveness like copper for large public companies. Which of the following statements concerning the requirements is false? We were doing so well with a really good worded question, and then we got to that last word. So we have to read through every one of these. So let's just go through. The auditor should evaluate whether internal controls or financial reporting are designed and operating effectively. Is that a true statement or a false statement? Is a true statement. They have to consider both the design and operation of controls over financial reporting. So it's going to be one that we'll keep. Management's report should state its responsibility for establishing and maintaining an adequate control system. Is that a true statement? That is also an accurate statement. So we're good with A and B. Now, we're trying to find the false statement, which is why we're going through these. Management should identify material weaknesses in its reports. So that sounds like testing. Is management responsible for testing internal control or financial reporting? Yes, they are. Yes, they are. That was a trap. It was a trap. Yeah. So that was one of those weird ones that we talked about at the beginning of chapter 7. We said normally managers don't do testing, but internal controls or financial reporting or under Sarbanes-Oxley Act, they do have a responsibility under that particular requirement. So it's one of those rare exceptions to the rule. So the auditor should provide recommendations for improving internal control in the audit report. All right. We were so close until those last 4 words. In the audit report is not where it goes. They provide recommendations, but it's provided to the audit committee and to management. So that would be the kind of caveat there. So it's false because of the last 4 words in the entire question. All right. A control deviation caused by an employee performing a control procedure that he or she is not authorized to perform is always considered a what? So the absolute statement there is really, really important. Okay. Let's go ahead and talk about C and D real quick. Is it always going to be a significant deficiency or always going to be a material weakness? No, the reason why is because those particular 2 criteria are requirements on likelihood. They are judged by the likelihood of a particular, magnitude of a particular issue. Since we aren't given any information about what the magnitude of this issue is, we can't say it's always a significant deficiency or always a material weakness. So we can cross out C and D and we can move on to A and B. So somebody performing a control procedure that they're not authorized to do. It sounds like the control itself is good. They have a control in place, but somebody is ignoring the control. What do we call that? Is that deficiency in design or deficiency in operation? Deficiency in operation, yes. Okay, the control is present, but somebody is ignoring it, so it's just basically being bypassed in that regard. So B is our answer. 723. Which of the following controls would most likely be tested during an interim period? Now, we've talked about testing controls in the interim period. This was something we talked about back in chapter 6. And one of the things we had to note about the reason that we can test controls in an interim period is the controls should be consistently performing over time. And that's going to be true for most controls, but we do need to note the characteristics of controls. If controls are operating consistently over time, they're doing the same thing over and over again, then testing in an interim period is going to be an effective approach. So that's basically what we're looking for in our answer. All right, controls over non-routine transactions. What do y'all think about that one? If it's not routine, it doesn't seem like it's going to be something that's going to be consistent in performance. So yeah, that would not be an answer that we'd accept. Controls over the period end financial reporting process. How frequently does period end recur? We're talking about annual financial statements once a year. We're talking about quarterly, then we'd say like 4 times a year. But even then, that's not a routine process. Controls that operate on a continuous basis. Does the word continuous imply routine? Yes. Okay, so that's probably our answer, but let's look at D. Controls over transactions that involve a high degree of subjectivity. So even though we like to think that AI can perform all the human tasks, keep in mind that computers are not going to be the end-all source for all information, that we still have to be expert enough to jump in and say, we need to evaluate this, and that subjectivity gives us pause. Controls require subjectivity, then they're going to be ones that we want to scrutinize in much more detail and on a much more regular basis rather than testing an interim. So C is our answer. 728. In auditing a public company, Natalie, an auditor for NM Neal Associates, identifies 4 deficiencies in ICOPR. 3 of the deficiencies are unlikely to result in financial misstatements that are material. 1 of the deficiencies is reasonably likely to result in misstatements that are not material but significant. What type of audit report should Natalie issue? So let's just go ahead and talk about these real quick, okay? The 3 deficiencies that are unlikely to result in the financial statements that are material. Now, this is a little bit of a misnomer because the way that it is implied, it sounds like these are just unlikely to occur. And remember, likelihood is our first criteria. But by the fact that these are control deficiencies, it means they're at least likely to take place. So this wording is really awkward. What they're saying is that these control deficiencies are not going to be large enough to be considered really anything beyond control deficiencies. So we can largely ignore those. They are something that we would convey to management, but are not really going to influence our opinion. The one sticking point is going to be this last one. It is likely to result in a statement that is material, but not material, but significant. So by our criteria, what type of deficiency does that represent? Is it going to be a control deficiency, a significant deficiency, or a material weakness? 33% chance. Gotta get a hint, it's not a material weakness because it's not material. 50% chance. It's a significant deficiency, okay? Something that is significant. So remember our definition of significant deficiency is something that is not likely to be a problem in the current period, but be a problem if it's left unchecked for a long period of time. So significant deficiency. The question here, though, is once we've evaluated that we've got some control deficiencies and a significant deficiency, is how does that affect our report, our audit report over internal controls or financial reporting? Because remember, we have to issue a separate report. So if we had a material weakness, what type of opinion would we render? That's an adverse opinion. That's where we had the adverse opinion. We do not have a material weakness, so we'd not have issued an adverse opinion. It's going to be an unqualified opinion or an unqualified report, okay? By the way, what's an exculpatory opinion? Absolutely nothing. They made that up just to confuse you, okay? That's something, by the way, you will see in really, really complex questions over accounting. This is not just auditing, but this is for anything that's going to see like some sort of accounting certification. They will throw information before you that you've never seen before. It says, oh, I don't know that. Is it something I know? 9 times out of 10, it's not something that you know, and it's deliberately not something that you know. So if you see something that doesn't look familiar, it's probably not familiar. Now, if you see something that doesn't look familiar and it should be familiar, shame on you. All right, but yeah, that's the challenge there, is trying to identify something that we talked about, and that's definitely not something we've talked about. By the way, can you issue a disclaimer opinion for reports over ICOPR? Is that a possibility? It is possible. Remember that by definition is going to require scope limitation, something we could not do our job over. 730. Which of the following statements concerning control deficiencies is true? All right, well, let's just go through the answers. The auditor should communicate to management in writing all control deficiencies and internal control identified during the audit. Is that a true statement? That is a true statement. So A is our answer, but let's go through the rest. All significant deficiencies are material weaknesses. No, they're called 2 different things for a reason, all right? All control deficiencies are significant deficiencies. Same thing, not there. Now, would it be fair to say all significant deficiencies are control deficiencies? That would be a fair statement, even though we separately categorize those, remember, because control deficiencies just represents our larger category of any problems with controls. So we could make that statement, but that's not what's being made there. An auditor must immediately report material weaknesses and significant deficiencies discovered during the audit to the PCAOB. So first of all, we only report material weaknesses externally, and then we report those in the report, not to the PCAOB. PCAOB may be a part of the audience, but they would not be the exclusive audience. All right, a lot going on there, but let's move on to some sampling questions now. Samples to test internal controls are intended to provide a basis for the auditor to conclude whether what. All right, so we're testing controls. What are we trying to establish? Let's just go through the answers. The controls are operating effectively. Well, that sure seems like a good answer, and that is in fact our answer. The financial statements are materially misstated. So are we making this determination of the account balances in the financial statements if we're testing controls? Not really. It's part of the process, but it's not really that quick. The risk of incorrect acceptance is too high. Again, there is incorrect acceptance would imply something completely different. Materiality for planning purposes is a sufficiently low level. Are controls and materiality, are they the same thing? They're related, but they're not the same thing. We talk about sampling for internal controls. We've already established materiality. So yeah, that would be separate as well. All right. Question 814. Which of the following combinations results in the greatest decrease in sample size and an attribute sample for tested controls? All right, so let's just go ahead and talk about these individually. So confidence level. What is going to decrease confidence level? Or sorry, decrease sample size? Decreasing the confidence level or increasing the confidence level? Decreasing, because if you need to be less confident, you need to test less fewer items. Okay, so we can say decrease. So it's going to be A, C, or D. All right. Tolerable deviation rate. Now, keep in mind, we consider tolerable deviation rate and expected population deviation rate jointly. But if we hold one constant and we change the other, what is going to result in a smaller sample size? Increasing or decreasing tolerable deviation rate? It would be increasing, because remember, if we make the distance between those two larger, that decreases sample size, and we make it smaller, that increases sample size. Everybody remember the idea problem that we walked through on Wednesday when we made them almost identical and we had to test everything? That's kind of the extreme example that you can link to. So it's going to be increase. So we've got decrease, increase, increase. So it's going to be C or D. Expected population deviation rate. Is that going to get, or is it that decreases or increases? Sorry, I guess say, if our sample sizes are going to decrease, what does that mean in expected population deviation rate? Decrease as well, because we're making the distance between these two larger. So decrease, increase, decrease. C is our answer. By the way, I love this next question. I don't know if you're going to love it as much as I do, but I like questions that you have to think about multiple parts of the question simultaneously. We were going over some CPA prep questions in my graduate class today, and we were doing sampling, ironically enough. And there was a series of questions where they had to think about like 5 things simultaneously. Say, these questions were ridiculous, Dr. Barnes. Say, no, isn't it great? Yeah. So this is a kind of a complexity light question, but it's still a really good question. So assume an auditor is evaluating a statistical attribute sample of 50 items that resulted in 3 deviations. What should the auditor conclude if the tolerable deviation rate is 7%, the expected population deviation is 5%, and the allowance for sampling risk is 2%? So what are we comparing when we're trying to make this determination? What 2 figures are we comparing to one another? So first one is given tolerable deviation rate. This is what we can tolerate in our for respects to deviations in our testing, and we can only tolerate 7%. We're comparing that number to what item? What was that called? Called the upper error limit. Okay, so all we need to do is compare this number to the upper error limit. So where is upper error limit in our problem? Not given in the problem. It's not given in the problem. So yeah, we need to figure out what upper error limit. Now remember, upper error limit is composed of 2 parts. Our sample deviation rate plus our allowance for sampling risk. Now allowance for sampling risk is 2%, so we have to add 2% to some number. So if I just add it to 5, am I good? No, this is not my sample deviation rate. This is the expected population deviation rate. What is my sample deviation rate? Well, let's see. I had 3 deviations in my sample with a sample of 50 items. What's 3 divided by 50? 6%. My sample deviation rate is 6%. So 6% plus 2% gives me 8%. This is greater than my tolerable deviation rate, so I'm going to conclude that the test is not effective, or the control itself is not effective. Now, which of these answers best represents what I just said? Let's go ahead and read D. The planned assessed level of control risk should be modified because the sample deviation rate plus the allowance for sampling risk exceeds the tolerable deviation rate. That is a good explanation for what we just went through. I hope so, because that's the answer. Okay, if that's not clear, then we'll need to step back and relook at that. That's basically what I just talked about. All right, next question is less exciting, but I had to throw a few questions for chapter 9 in. Which of the following sample methods would be used to estimate a numeric measurement of a population, such as dollar value? So we talk about attribute sampling. What are we doing with an attribute sampling? We are answering a yes or no question. Does a particular attribute exist? Was the invoice stamp paid? Was a purchase order signed by an authorized personnel? Does the voucher contain all documents? Those are examples of yes, no questions. When we get to this type, we're trying to determine what is the difference between our expectation and the actual amount, all right? What type of methodology we use? Well, we only talked about two general types of methodology, attribute sampling and variable sampling. Yes, variable sampling, so D. And then how would it increase, so 916, how would it increase in tolerable misstatement and assess level of control risk affect sample size and substantive tested details? So if we increase our tolerable misstatement, what does that mean for the amount of work that we have to do as auditors? Is that a good thing if we increase our tolerable misstatements? I'm excited if I increase my tolerable misstatement because that means that I have less work to do. So that means that I'm going to be sampling fewer items. So I'm going to decrease my sample size, which means A or B. So if you only got that far, you had a 50% shot. So yeah, sometimes that's good enough. Let's go ahead. Increase the assessed level of control risk. Okay, so what does the increase in the control risk mean? We're saying that controls themselves are going to be problematic. Controls themselves are problematic. What does that mean about the testing that we have to do after that? If controls are bad, does that mean that we have to do more or less work later on? More work, which means we're going to have larger sample size. So we're going to have to decrease our sample size for increase in tolerable statement and increase our sample size for increased assessed level of control risk. So B is our answer. All right. Moving back to chapter 7. Let's talk about some problems. So these are control deficiencies that may represent significant deficiencies or material weaknesses. For each control deficiency, indicate whether it's significant deficiency or material weakness to justify your decision. Now, as I said back in chapter 7 when we were talking about this is fine for the homework, but this is not sufficient for preparation for the exam. If you look at the practice exam, you will notice that there's some examples of you will need to be able to determine whether something is not a deficiency, whether it's just a control deficiency, it's a significant deficiency or material weakness. Now, I would like to have better examples of this, but the book only provides these categories of examples. That's why I use them. But keep in mind, you're going to be responsible for all 4 categories. It's not difficult, but I just want to make sure that everybody is aware that we're not limited to these particular types of questions. All right. So the entity uses a standard sales contract for most transactions. Individual sales transactions are not material to the entity. Sales personnel are allowed to modify sales contract terms. The entity's accounting function reviews significant or unusual modifications to the sales contract terms. Does not review changes to standard shipping terms. The changes in the standard shipping terms could require a delay in time to revenue recognition. Management reviews gross margins on a monthly basis and investigates any significant or unusual relationships. In addition, blah, 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 blah. All right. So what do we got here? Is this a significant deficiency or is this going to be a material weakness? How many people think significant deficiency? All right, you guys are right. It's significant deficiency. There's 2 real strong clues on significant deficiency. First of all, it says the individual sales transactions are not material to the entity. Now, you may say, what about an aggregate? And the answer is we don't know. It's not given in the problem. So we do have to look for additional information. Now, it says that there are probably control failures. There is a control deficiency, but there are also redundant reviews of the control itself, meaning that if there is a significant problem, I shouldn't say significant, a material problem, it's probably captured by that process or those processes. So that's going to be why I'm leaning towards significant deficiency for this particular one. Okay, that's what I would do is that one. So B, the entity has a standard sales contract, but sales personnel frequently modify the terms of the contract. Those darn sales personnel. The nature of the modifications can affect the timing and amount of revenue recognized. Individual sales transactions are frequently material to the entity. The gross margin can vary significantly for each transaction. The entity does not have procedures in place for the accounting function or regular review modifications of sales contract terms. Although management reviews gross margins on a monthly basis, the significant differences in gross margins on individual transactions makes it difficult for management to identify potential misstatements. Improper revenue recognition has occurred. and the amounts have been material. All right, this one should be easy. This should be straightforward. If the last one is significant deficiency, this one must be material weakness. And not just because the last one was significant deficiency, but there's a lot of factual differences between these two. So first obvious one, this is the modifications are frequently material. And they said that management does have a review process, but the review process is not very good at identifying potential misstatements. Those factors taken together is pretty obviously a material weakness. All right, going to C. The entity has a standard sales contract, but sales personnel frequently modify the terms of the contract. This entity really needs to do something about their sales personnel. They need to go on a hiring spree. Sales personnel frequently grant unauthorized and unreported sales discounts to customers without the knowledge of the accounting department. These amounts are deducted by customers and paying their invoices and are recorded as outstanding balances on the accounts receivable aging. Although these amounts are individually insignificant, when added up, they are material and have occurred regularly over the past few years. So this one is a little bit more of a divisive one. The first two were pretty obvious. Okay, but this one, we say individual transactions are not material, but in aggregate, they are material. What are we leaning towards? Probably. Yeah, leaning towards material weakness, but we're not for sure. Do we have any information about management reviews in this area? Not really. That would really cinch it in if we could actually make a determination of management review. What is the most likely indicator that management review is not effective in this area? There's a piece of information that gives us that detail. Not that not specifically the management review is not effective, but it tells us, it alludes to it. The unauthorized is part of it. Yeah, that's part of it. That's part of the analysis.
Knowledge of the accounting department.
The knowledge of the accounting department is another one. So we got some authorization issues. I was leaning a little bit more towards the ends that these have occurred regularly over the past few years. If these have occurred, these transactions these misstatements have occurred regularly, it probably indicates that management reviews, if they do exist, are not very good in this regard. All right. So altogether, I think I would lean towards material weakness on this one, though this is less clear cut than our previous examples. All right. Did you guys enjoy that? As much as you can enjoy any assignment in auditing. So if so, great, because we're going to do some more. We're going to do some more. We're going to do 736. All right. During its assessment by COFR, the management of Lawrence Corporation as auditors identified the following control deficiencies that individually represent significant deficiencies. Now, this is an interesting one because in one by one, these are not going to be material weaknesses, but we need to evaluate whether taken together, these are going to equal more than the sum of their parts. Okay. Or well, they'll equal more than the individual components, I guess I should say. Inadequate segregation duties of certain information system access controls. Boy, that's a way to get Dr. Barnes hard on the collar. Inadequate segregation of duties. Several instances of transactions that were not properly recorded in subsidiary ledgers, while transactions that were recorded properly are not material. The gross amount of the transaction, the type total of several times materiality. Lack of timely reconciliations of the account balances affected by the improperly recorded transactions. Okay, so we have an obvious control deficiency because there's no segregation of duties in the area. It also appears that any automated controls that would be present to kind of detect this are not effective because they've had multiple misstatements that have been in aggregate several times the materiality. And then a lack of timely reconciliations. Could that be kind of considered a compensating control? Something that we could actually do to review to identify these? Looks like there's a lack of timely reconciliations. By the way, does anybody remember bank reconciliations back from 302? Yeah, we're going to explore those again back when we get to the later parts of the course. The good news is I no longer have my students actually perform bank reconciliations, but we are going to learn how to audit them. And a reconciliation can be a good, effective control in an organization if done well. It's not done well here. We haven't properly recorded transactions. So what do y'all think? Is this enough to up this to material weakness, to give us a material weakness upgrade? I'm going to say so, okay? I think there's enough going wrong here in aggregate that are related that we could actually say it's a material weakness. All right. During its assessment by COFR, management of First Coast Bank Corp. And its auditors identified the following deficiencies that individually represented significant deficiencies. The design of controls of the estimated estimate of credit loss, a critical accounting estimate, the operating effectiveness for controls for initiating, processing, or reviewing adjustments for the allowance for credit loss, and the operating effectiveness of controls designed to prevent the improper recognition of interest income. In addition, during the past year, First Coast experienced a significant level of growth in the loan balances that were subject to the controls governing loss estimation and revenue recognition, and further growth is expected in the upcoming year. So we've got several related areas that either have a deficiency in design or a deficiency in operating effectiveness. In either way, the controls themselves are not effective, and individually, each of those represents significant deficiency. Now, I'm going to be honest, if it weren't for that information, I probably would say, I don't know if this is enough to be ramped up to a material weakness. But then they give you some additional detail. They say, from the previous year, this is becoming a much more prominent concern, and it will continue to be a big concern moving forward, an even bigger concern. All right. What can we analyze, or what can we use an analogy to that? Maybe a big blue van driving without any oil. Okay. The longer we drive that thing, the more likely it is to break down. And it becomes increasingly more prominent that's going to break down if we don't pay attention to it. So in the past, this was a significant deficiency. In the present, are we going to ramp this up to material weakness? What do you all think? Put some oil in that van, Dr. Barnes. We're doing this material weakness right now. Yeah, I think this is enough to be a material weakness given the confluence of factors that are involved. That would be my approach to that one. That I think these last three examples were a little bit more dicey. It would be a little bit more difficult to justify. By the way, I want you to note on the exam, there will be very clear-cut language that will be used to justify this. So it's going to be very, very clear based on the language that I use, whether it's what type of deficiency you're looking at or whether it's a deficiency at all. So you need to be looking for very specific vernacular in the questions that I ask, okay? Like such as the words significant but not material, likely to happen, unlikely to happen, significant magnitude, things along those lines. All right, so those are the types of language you should be looking for. Keep an eye out for that as we prepare. All right, last question for today, or last question for today, but let's go ahead. Take a look at 825 and 826. So this should be familiar to what we talked about with respect to chapter 8. I had you go through and do these again. By the way, this was one of those nice ones that it honestly did not matter if you did idea or didn't do idea. Idea made it a little bit easier and gave you a little bit more precise results, but your conclusions were going to be the same regardless. So because I'm really lazy and I don't want to open the trim and remote desktop, we're just going to work with the worksheets. But if you did an idea, kudos to you for going that. All right. So we've got some examples here. We're trying to determine what the sample size is. So let's just go ahead and review what we talked about on Wednesday. What does this risk of incorrect acceptance tell us? The confidence level. If we have this information, we determine confidence level because 100% minus this number gives us our confidence level. So we've got 5% and 10%, which means that we're going to actually use those to determine our sample size based on these two tables. So tolerable deviation rate, expected population deviation rate. These are our axes for the tables here. So here's our tolerable deviation rate. Here's our expected population deviation rate. All right. So what do we get for number one? I'm not going to look this up in the table because I'm assuming that you're familiar with this by now. But what was our sample size for the first control procedure? They can look on my spreadsheet. They can see what I've got up here. 156. Did everybody get 156? Has anybody ever, just out of curiosity, since we got a moment, has anybody ever nodded their head when they got the correct answer just because they didn't want the professor to know that they got it wrong? Or when you don't have the right answer, you just like, I'm not going to nod my head. Just okay, well, whatever. There's no judgment here. I was just curious, you know. I did something really, really bold and stupid yesterday. I was in faculty senate and I mentioned Dunning-Kruger effect, which I've talked about in this class, by the way. I mentioned the Dunning-Kruger effect, and I said, and we're all educated people here, so we all know what that means. And I started looking around all the faculty members at Truman State, who was nodding their head, who knew what that means, who was keeping their heads straight. I was like, yeah, the people who are nodding their head have no idea what I'm talking about. So, you know, I'm not going to tell you which faculty members they were, but there were a lot of them. So, yeah. Anyway, yeah. So we don't know. We're not all knowing. We're not all seeing. All right. So moving over here. Control number two, we got still a risk of incorrect acceptance of 5%, and then tolerable deviation rate, expected population deviation rate of 2%. Now, this is interesting. The distance between these two is roughly or is exactly the same as this. So is our sample size going to change by a lot? Probably not. It has actually a bigger change than I thought, but what did we come up with on the second one? 181? 181. Okay. Moving over to our other table. Confidence level of 90%, 7%, 3%. What do we got over here? I got 94. How about you guys? I say that confidently as I got 94. The book got 94 is the more appropriate answer, but I would have gotten the same answer. I'm confident. Okay. All right. And then over here, 10%, 8%, 4%, still a 4% difference here. So the sample size is probably going to be pretty close to what we had before. So it's going to be 98. All right. What do you say we just plug these in down here? Okay. So I'm going to do what I did before because I keep forgetting to put tolerable deviation rate in the second table, but we need to know that. Remember, we're going to compare our computed upper deviation rate to the tolerable deviation rate, which is our upper limit right down here. Okay, so A26, we need to do some calculations here. So we have our sample sizes and our number of deviations. Sample deviation rate for 0 deviations. This is the easiest question I've asked the entire day. Pretty certain, this is like a 5th grade question, or maybe even lower. When was it when you started dividing in zeros in the numerator? You said it was 0. What grade was that? That is a much more difficult question. Yeah, so you got 0%. Okay, 0%. All right. 5 divided by 181, what do we got here? 2.8%. All right. 4 divided by 94, 4.3. 3 divided by 98, 3.1%. So those are sample deviation rates. Just as a reminder, though, this is not telling us what our population deviation rate is. This is saying that our population deviation rate is somewhere around that. Okay. So we can draw arrows on either side and say it's within that range. On this one, we can only really draw it on one side because it can't be less than 0. We can assume that the true population deviation rate is probably close to 0, but not exactly 0. What would be the computed upper deviation rate for something with 0 samples in the 95% level at 156? Come up with 2%. And again, I forgot to put percentages there, but it's 2%. What about up here, a sample size of 181 at the 95% confidence level, 6.9%. Then 90 or sample size of 94 at the 10 or 90% level, 8.7%. And then finally, 98 sample size 98 at the 90% level is actually using very close estimates there. So there we go, 7.3%. All right. So if we do the comparisons here, let's just go ahead and work out our conclusions here. So we have tolerable deviation rate of 4%. We've got a computed upper deviation rate of 2%. Do we accept the control as being effective? Yes, we do, because we note that we can tolerate up to 4% deviations. The most likely upper error limit that we would see in the population is 2%. This is really annoying. Got to go ahead and add a percentage here. Oh no, that was a bad idea. Okay. Let's try this again. I should have known better. I've done this before. All right, there we go, 2.0%. Okay, 2.0%. So this is what the highest likely percentage deviation we see in the population. Since this is less than what we can tolerate, the control is effective. All right, same question here. Tolerable deviation rate of 5%, computed upper deviation rate of 6.9%. Control is not effective. The possibility that the population could have deviations greater than what we can tolerate is enough for us to render the control not effective. And same thing over here, 7%, 8.7% not effective, and then 8%, 7.3% effective. Now, what does this mean? Real quick, just to wrap this up. It's easier for us to say the control is not effective. This is the result of our test of controls. All right. So if I conclude that a control is effective, that's a good thing, right? That means that I'm getting assurance in the operation of that control. So assuming that I've assessed control risk effectively, and I said that, say, control risk was moderate or low, what is saying that a control is effective doing for me? Basically saying that my control risk assessment was good. So I don't have to do more work when I get to substantive testing. All right, flip that over. I assume the control is effective. I get to this control. The control is not effective. What happens to my control risk? Goes up. Okay, what is control risk going up often due to substantive testing? Well, it reduces detection risk. We know detection risk going down is bad because that means we have more work to do. So when we see not effective, that's where we groan as an auditor, saying that's more work for us to do. So it's not only just important to understand what the results are, but what the results mean for our work that we have to do subsequent to that. All right. Well, about 15 minutes early. Any complaints? You can hang out for 15 minutes and share stories, or you guys can enjoy your weekend. So I'll assume that you'll want to do that, and I'll see you all on Monday for chapter 17.